and gentlemen. Welcome to Walk the Block. We're navigating digital finance all together. I'm your host for the evening, Zenith, and I'm joined by my excellent co-host, Tracker. And tonight we're going to be discussing a little bit of market update because, yes, we did find new area for price action to go down even more. But more importantly, the Ethereum Foundation is the meat and potatoes here tonight. Recently, they announced that they are laying off about 20% of their workforce and restructuring into 5 different groups. Ethereum has definitely had a rocky last 4 years, and at this point, they are still number 2. However, I think there is a conversation to be had about what their future looks like and what this latest play also looks like in regards to that. But yes, also, as the headline suggests, the Senate did pass the housing bill, which inside of it, they snuck in a little requirement to ban central bank digital currencies through 2030. So we're going to be talking about that one as well. But outside of that, we got a big show tonight, so we're going to get to it. Tracker, how you doing, buddy?
Doing good, man. Price action's not fun for anybody unless you're the Bears. But outside of that, I mean, I'm doing well, man. Doing good. Yeah, we're gonna dive all into that, man. There's a lot of good stuff to dive into those things. I got my theories on stuff as well around the foundation and other things. But yeah, let's just get into it, man. So I think the biggest thing is what? What do you want to dive into first? Price action, because
yeah, let's hit it first.
That's probably got most people.
Alrighty. Well, currently sitting at about $59,400 Bitcoin with a recent low in the last 24 hours of 58,000 right on the dot, pretty much. That's significant because, well, we started off the cycle at about 59,000, pretty close to the dot on that one, meaning that we are now technically lower than the cycle start. So, couple of discussion points to have on this one. Is it possible that this could be the end of the previous cycle? I would argue no, because that means that we would be at an 88-day cycle, and that is way past any sort of range of probability that I have calculated for this one. The probability of that happening is seriously lower than like half of a percentage point. And at the same time, I think the argument based on just structure alone, you have better arguments for structure, which are still even less plausible in my personal opinion. Like if you wanted to look at this little like wick right here, that one right there on the 23rd of May, and be like, oh yeah, we had a shorter cycle. That would call it a 55-day. And then we're currently on day 34 of this one. That's more plausible than that 88-day cycle by far, but at the same time, it also still fundamentally ignores some things like a day 3 cycle high for the current cycle. But based on price action, you could argue that yeah, because this dropped so much, that would indicate just such a weak start to the cycle and why we've just dropped so much. But also at the same time, it doesn't really appear that makes sense with a day 38 high on the previous cycle as well. But overall, I think this is the accurate count as it stands right now. Currently on day 21. At this point, odds are we are going to have a down cycle, meaning that I am anticipating that the end of the cycle will be lower than that 58,000 level, which if you've been listening over the past few weeks, we gave some predictions for the rest of 2026. And I was saying that 55K is kind of like my 50% target for the low, going all the way down to like 52 and maybe even 48 if we get real crazy with it. And based on this movement right here, yeah, this is kind of making me look like a bit of a fool because like we might be looking at possibly the bear market low coming up this cycle if this trend continues. But at the same time, there is a little bit of hopium that comes out of it. If we want to look at our RSI, we had a low all the way down at 15, and then the low that happened in the last 24 hours only was at 30. So what this shows is actually we have a bullish trend on the RSI, but a bearish price movement. This is what's called bullish divergence. What it's signifying is that the sell pressure is starting to let up. Because yes, price did drop, but at the same time, the sentiment is not dropping, indicating that there could be a potential reversal coming. But at the same time, only time will tell. Trying to read the markets is like trying to read the crystal ball. We have indicators, we have theories, all that kind of stuff does guide the decisions. But at the same time, it doesn't change the fact that, yeah, we dipped down to 58,000 below the cycle start. And if you're in the bearish camp, or if you're in the bearish camp, you're probably the only person that's happy about it. Everyone else is probably either exacerbated, already sold out of the market, or just really holding on to any sort of hope that there could be some sort of rally here in the summertime to get stuff going again. But as it stands right now, yeah, the technicals are not looking great as we got rejected off that 20-day moving average again and found a new cycle low.
Yeah, and I think if anything, we were seeing that possibly you could have seen maybe Bitcoin bounce up on this counter rally. And not to say it's necessarily out of the picture, but even if we got a rally up, say, 71 to 69,000 area, it's probably going to be short lived and get rejected at least somewhere at that point to go back down and retest the lows. I know technically we're retesting the lows now, but I mean, like more sustainable, more long term is what I'm referring to. Now, the other big thing about Bitcoin is it has definitely violated the 200-week moving average
Oh yeah.
on the Bitcoin, which is, we pointed that out. We've been pointing that out. That's a significant time. So here's the thing: anytime Bitcoin gets near the 200 weekly moving average or below it, has always been a fantastic time to buy Bitcoin. Now, with that being said, we talked about last week too. The headwinds with Michael Saylor. Everybody's thinking that MicroStrategies is a Ponzi or whatever you want to label it. It's a threat, and it's a narrative that's not going to go away. So the Bitcoin can see some pressure on it that could hold it down for a while because of people want to get out of it. And we also talked about it last week too about, you know, people that are in TradFi are not used to being crypto. They're not used to these violent, 50%, 60% drops. So people aren't being able to stomach these ETFs. So that's probably another reason why you're getting these outflows in these areas. So yeah, Bitcoin could shoot down more, absolutely, because of those pressures. Ethereum as well, just because of the same things I've stated. Now, the other thing is Tom Lee, they've been buying up more Ethereum on this downfall, and they said they're going to keep buying. They're going to time DCA. Rough time DCA, and it seems like every 3 weeks or so they're going to be buying Ethereum because they're spreading out that last chunk, that last billion or whatever they have left to keep buying up at these low prices. So they will be accumulating it. I did in Ethereum as well. Ethereum right now is finding a double bottom right now. Double bottom, very short-lived double bottom. The one that we put in on June, we'll say 4th, 5th, we're basically right at that same level now. So Ethereum, the ETH BTC ratio is holding up a lot better. So ETH is holding up better than Bitcoin. I don't know. It's just the worst of the bunch, I guess, for right now. That's the best way you can put it. But yeah, technically, things are getting so overdone to the downside, and people are like, well, they can get a lot worse. Well, yeah, it could get a lot worse, but it's interesting when you have people like, Tom Lee and others that are saying, yeah, things can get worse, but yet they're still buying. So it's very interesting that they're buying, and that's really all you can do at this point. Is if the market wants to keep giving you lower prices, if you have dry powder. I know people are like, great, I've ran out of dry powder, I've put dry powder, I've done it, and I've redid it, but if you can, that's just all you can really do at this point if you're a long-term holder and putting in positions. You could unwind some of your recent, buys if you wanted to do that to raise up more dry powder. Of course, you might take some of the losses at the time on that. Personally, really, it's just in Ethereum and not Ethereum, but crypto in general on these prices. Everybody needs to stop. You don't get mixed in with the traders, the degen traders, the ones that are going out there doing a lot of trading. That's fine. If you want to live that world, that's fine. But just know that's a totally different mind game. If you're here for the long run, then you're just building in positions as it's going down here. And eventually things will turn around. It's just, is it going to take time? It's going to take time. The sentiment of crypto is horrible. Things have been beaten down. But any asset that ever gets just bludgeoned and hated upon is always a great time to buy. In just about anything in history, and it's a horrible asset, nobody wants it, that always seems to be a great time to buy. And if crypto right now is the most hated. And I know there's a lot of memes out there and jokes that people put out there, but it has definitely been the worst performing asset in all of assets. Shout out to Sami, just because I think he was funny how he brought up potatoes. I was laughing when I heard about that. Like, that you can't write this stuff. I mean, the agricultural is doing pretty well too. But keep this in mind. All of these things that are doing so well, this is the interesting thing about it. Everything that's doing so well out there, it's tied to everything's coming in on the money supply. So it's very interesting. Money supply keeps coming in. Everything else is going up because of inflation. Crypto is kind of financial 2.0 upgrade to the entire infrastructure of finance, yet it's getting bludgeoned and pushed down, 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 and hated upon. And yet the big smart money institutions are not only are they buying, but they're building and laying out groundwork and foundational roadmaps that they're going to implement over these long hauls. CBDCs, and of course, that's going to, you can't talk about CBDCs without stable coins. I mean, you just can't have that conversation. But stable coins and real world assets, tokenization, all that stuff is going to live using the crypto technology essentially. So I just find it fascinating that everything's going up, yet everything in crypto is going down, and yet crypto is here to basically I'm not gonna say replace fiat. I'm not gonna go that far. But what I am gonna say is it going to bring us into a new world where a lot of people aren't seeing it, the tokenization and all that stuff, unless you're really close to it, like we've been, and others that have been following us. But it's just, I think it's just a fascinating concept. It's going to change. It's changing the financial world, yet it's getting bludgeoned by every other asset in the world's going up because it's going up because of inflation, because of the money supply. That's the thing I find just interesting, but it is here nor here. So long story short, I would be saying, like every time I'm going to be saying it, is I'm personally going to keep DCA and buying. That's all I'm going to keep doing. I'm just doing it for the long haul, and I'm looking at these prices. So going back to the charts, I think Ethereum now is in an interesting spot. It's double bottoming. Recent low in Ethereum though is, look, you got to go back to April 2025 was the low at 1400 in Ethereum, so that could potentially be a support. Right now where it's at right now is a pretty good support point of control, because that full 1500, I know it's psychological level, but that 1500-ish level has been support that goes all the way back until January of 2023. So that has been support for a very long time. Could it break down? Yeah, it could very easily break down. But I keep looking at that 200-week moving average, and look how much farther it keeps falling away from that 200-weekly moving average. The farther it moves from that 200-weekly average, to me, I'm looking at that more as, okay, this is just more and more discount. And eventually it's going to turn. That's how I'm looking at it as. That simply is how I'm approaching it. And with Bitcoin being 200-weekly moving average, it's starting to get to very attractive prices. We already know it's a very attractive price, but I think, like I said, Bitcoin's going to have more selling pressure because the narrative that of the Michael Saylor and MicroStrategy concerns. That's not going to go away. And you got Jane Street and other ones out there shorting it heavily, MicroStrategy. And there's a lot of theories out there that, there's people that there's one way, if you really want to capture a good supply of Bitcoin, you can make MicroStrategy goes under and you can take over a huge supply on the discount, essentially. So that's going to be a narrative that's not going to go away.
Agreed. Yeah, looking at the charts right now, it's Ethereum. The double bottom is an interesting spot, especially because we have confluence with back in April of 2025. But again, this happened when Ethereum was shorted to absolute oblivion. So you definitely say that this was a lot of price manipulation. As a result of that, the 200-week moving average should be higher. And if that's the case, then the current drop looks even better based on how far below it is under that. But
zoom out on Ethereum.
Yeah,
and
this
just
is
look
weekly,
at
by the way.
Yeah. Draw a line on all-time highs. Right?
Yeah.
Now come down a little bit. 1, 2, 3, 4, 5, potential 6 tops. That's just with this kind of resistance. It doesn't happen. That's pure manipulation. That is pure manipulation. We were supposed to break up when we finally broke through right around there in 2025, and it looked like we were going to rip the upside and got just absolutely rejected and pushed down. That's pure manipulation. And it started with Binance. So here's the thing. It's going to keep getting manipulated, and it's going to keep getting suppressed until market makers want it to run. What are they doing? They're building their bags. That's the easiest way I can say it. This is a how long can you endure the pain? So if your time horizons, if you can start just thinking further out, like stop worrying about next week, stop worrying about next month, next 4, 5, 10 years out, where is it? What's it going to be? Knowing that we know the infrastructure, we know all that's coming, we know that's happening. Where's crypto going to be at that point? That's why you can't be looking at this in a short-term bubble, because you're going to drive yourself crazy and you're going to keep feeling pain. Look at it differently. Look at discounts coming in. If you have longs on, hell, I have longs on. I got quite a few longs on that I've round tripped, and that's fine. I'm okay with that. I'm okay with it. Now, do I think it was manipulated? Yeah. Do I think we were correct? Yeah. But at the same time, you can't fight the market makers, and you can't fight, the tape. It's just it. So take it what it has. So turn the best thing you can and just keep lowering that dollar cost average. And that's what I've been doing. I'm lowering my dollar cost average roughly every month. I'm lowering it.
If you're getting in at $1,500 Ethereum, historically, especially given where we are now, that is still very much a screaming buy, in my personal opinion. Because the last time you had prices better than this was obviously this one flash crash. But outside of that, talking the actual bear market of 2022 and 2023.
Yeah, I mean, I still have positions on from Q4 of 2022 that I put on. I'm that's conviction. You have to have conviction. Could you know, you have to. I'm sorry. And I bet people are like, you shouldn't hold. What's funny, but you know, this is one thing I think I always find funny. People wanted to I was there when a lot of the .com happened. I was there when Facebook went live, when Google went live, when all these things were trading. And if I would have just held on to those, I wouldn't even have any problems. I got into all of those very, very early, and I got out way too soon. What I've come to realize is people who pay close attention to this are so early, they don't even understand how early you are, and that you don't quite understand. And you try to talk to the average person on the street, they're not going to understand anything you're saying. You're going to be speaking a foreign language unless you're talking to somebody in finance or somebody who's familiar with crypto. That you're so you got to be able to lower. You got to slow down and not think that you got it wrong. It's just that you're so freaking early and there's so much manipulation. It's easy to be manipulated right now that the thesis hasn't changed. Now, if the thesis changed, if they're going to say Ethereum's going to shut down the entire operation and Solana's going to take over, then that changes the whole ball game. Yeah, absolutely. We got a huge game changer now all of a sudden. But right now, last time I looked, Ethereum has the lion's shares of RWAs, and we're moving in that direction. But just to go back to the price action, I think you're getting to a point where you're starting to feel real pain. And we've already been feeling pain, but I'm saying you're getting a lot of pain. And I'm going to be very interested here to see are the major, I find it, how would I put this? Most of the crypto market makers and everybody seems to be targeting that 40,000 level. And what are they targeting? Like 1,000 or 800 in Ethereum. They're all targeting those things. So if everybody is thinking that, do you think that's going to happen? I'll be shocked if it does. I would be absolutely surprised if it actually does that, because that's going to allow so much money on the sideline to come in. I would be really surprised. Can it? Sure, it could absolutely happen, but I would be very shocked.
Yeah, this is
And just to add to it, the market, the influencers out there that are telling you all this, they're it's coordinated. And I'm at the point now where I'll have a strong belief we don't get paid to shield anybody's stuff. We don't get paid. We don't sponsor anybody's stuff. This is our straight up God's honest truth. We're putting our money, you know, what we speak about is what we do. There's nothing out here. Now, what I am going to say is the big influencers out there, they get paid big bucks. They make a lot of money for shilling coins, central exchanges, marketing, taking certain narratives. And it's just funny how they all seem to have very similar narratives. So would it be very hard to control there's not a massive amount of crypto influencers that have big influence. It's very simple. And if you have people being told what to say because they're getting paid to say it, then it's very simple to form those narratives. And I think that's what you're ultimately seeing to form, because they all seem to say the same number, the same levels. They're all saying the same thing. And I get it. And some of these guys are making a lot of money. That's all I'm going to say. So their life doesn't change if the market goes up or goes down necessarily. They're already very well and very comfortable. So it's just something to be careful out there. That's all I'm going to say.
Makes sense.
Sorry,
Yeah.
Zena. Go ahead, man.
By the way, you raised a really good point. I actually found this through some additional research. People talking about that 40,000 level for Bitcoin. One of the reasons that they're talking about that is this chart right here. Actually, I did not include this in the previous videos because I just forgot to put it in there. But this is the realized price chart. What realized price is you can pretty much take the cost basis for the entire market. This is the average price for every Bitcoin that has been purchased on the open market. Currently, it's sitting right around like $53,000 right now. And if we look at the historical trend on this one, the absolute lows come in when it's about 20 to 25% below the realized price. So back in 2022, we got down to like 16,000 when realized price was about 20,000. And back in 2018, it was about $4,600 realized price, actual price about 3,200. And then all the way back down in 2015, same thing. Realized price about $300, Bitcoin price about 200. So based on this, if we're looking at that, let me get my phone out of here for this one actually. So we're looking at 53,000. What's 20 and 25% below that? That's going to be 53 times
It's going to
0.8.
be very close to 40.
$42,400 and $39,750. Basically $40K on the dot. So that's what we're looking at. If this, I mean, all the indicators work until they don't, which, as we saw with the last cycle, a lot of the indicators stopped working. So I'm curious to see if this one works as well. But as it stands right now, this is the basis for a lot of that thinking. I happen to think we might not get as low under the realized price, but the historical trend shows that we usually sit under it for a couple months, and then we finally have one big peak where it goes down. If that's the case, then yeah, that 48,000 level that we talked about, or like 50,000 to 48,000, hitting that price would make sense based on this indicator alone.
Sure.
And that's what people are pointing towards. So it's like,
and I think they're also looking at fib levels and other things else. And they're also looking at major support levels that have been and clustered volumes and point of control volumes and air pockets. They're looking at things like that too. But like we said, now these on-chain data that we went over last week and the one you just showed, it's we don't know if they failed. We know they failed for calling a top indicator. We know that this last cycle. Do they fail going down though is the question now, you know? That's what we have to figure out now. Now we're going to find out how well are these things going to predict the drop. So interesting.
Yeah, that 40,000
call out.
It's possible to get there. I think it would take it would be a wick, and it would take something really aggressive to do so. But as far as like the data that supports it, there's this pocket from back in 2023, late 2023, where we kind of pushed up through it and then created a bit of a support. But realistically, we have not been there for a long, long time. And even coming up back in the 2021 cycle, took a quick stop at it before just pushing through, dropping back, pushing through, dropping back, pushing through, dropping back. So like it's as far as support and resistance levels go, that one is not very well supported. But at the same time, there's so many indicators. You could look at indicators for the next like week alone and come up with a bunch of different answers. So ultimately, time will tell.
Correct, but keep this in mind. You have TradFi that has access to every quant and every freaking AI bot and everything you could possibly imagine. So they're running statistics and probabilities across all of this stuff and backwards analyze. Trust me, they're angling this thing from so many angles because that's their job, you know.
True.
So they're gonna. It's another player here that has a lot of tools and a lot of resources to figure things out. And now these tools have even gotten more powerful even for us. And what do you think that's happened for them? So that's all I'm saying. If you're trying to pick bottoms and trying to pick tops, it's going to be very difficult. Can you get lucky? You can get lucky. You can get pretty close. I just think the people who got, and I don't even want to say luck. I just want to say they stuck to their guns. The ones who said, listen, the 4-year cycle's over, I'm out. That's it. And they did. And they stuck to their guns and it paid out very well for them. It's just, is it going to stay true to the bottom? I don't know. Like I said, we're finding out. That's for darn sure. Just to recall here, your 4-year cycle should be coming in somewhere in that beginning of October to the end of November time frame. You know, it's going to be somewhere in that ballpark. If we getting the next leg down, we could also chop sideways into that pocket. But I can tell you now, if Bitcoin gets close to 40, you're going to have people buying it up very aggressively because there's so many people on the sidelines that have been waiting for that. And I don't think they're going to wait for 40. I think it gets down to 42 or 43, 44. People are going to be pulling triggers. So I don't know.
Yeah, honestly, I think anytime we drop below 50, if we do, I think people are going to be getting pretty aggressive with it. Alrighty, tell you what, let's move on to kind of the big story. We talked about Ethereum, so let's talk about Ethereum a little bit more. Coming to us from CoinSpeaker on Yahoo Finance, Ethereum Foundation drops 20% of staff and reshapes into 5 protocol clusters. All right, what are we looking at here? Crediting the news headline, they announced they had eliminated 54 positions, roughly 20%, in its approximate 270-person workforce, not just to mention manpower. It also cuts its operating budget from 2026 by about 40%, reorganizing the remaining organization into 5 domain-focused clusters alongside dedicated operations and management supports, according to this. This is not simply a headcount reduction. It is a deliberate pivot away from the foundation's historical role as Ethereum's central development engine towards a narrower mandate as protocol overseer. All right. So the 5 clusters that we have, they're replacing the prior functional systems are the protocol layer, focused on post quantum security, zero knowledge EVM, and layer 1 privacy. The access layer, building tools for users and AI agents to transact and delegate on chain without intermediary reliance. The user layer, conducting empirical research on actual Ethereum network usage to ground protocol decisions. The communication layer, managing the foundation's public positioning across crypto, open source software, and cryptography research. And the institutional layer, engaging financial institutions, enterprises, governments, and academics on Ethereum integration and policy tracking. So
Pause there. Yeah, pause there. That's a good place to stop. So you're telling me the Ethereum Foundation is going to be run like a more proper IT company now, is what it looks like. Like the way they've segregated these into these are actual departments now. And I could say departments because how many people do they have, you said? They have 270 people, so they cut what, 54. So we'll say a
about
little over
220.
200. Yeah, 220. So you break that up into some departments will be bigger and some smaller, but these are basically going to be 5 departments, and they're going to focus on the EKVM rollup area and layer 1 private. That one definitely needs to be focused because, as they stated, they're getting away from the L2s. The layer 2s, they've gotten away from it. They don't want to. I don't know how much they're going to be relying on L2s, but I think that's why they're shifting it back to the Ethereum Foundation to do this. Yeah, access. That makes sense. You have the security side of the house. You have the access layer, which is another layer. That's another area there as well. Then you have the user interface layer. I'll just call it user interface. Front end. We'll call it the front end. People are utilizing it for it. The community layer. Okay, that's just simply they're doing cryptography research, so that's certainly a software or security layer of it aspect. But that's interesting. And then of course, institutional layer engaging financial. That's the finance side of the house and working with. That's more the political side and what they're going to have to do to engage there. So, to me, they trimmed the fat and they're repositioning it to run this like an IT shop instead of whatever the heck it's been. Because this Ethereum Foundation has been getting absolutely just pissing people off because they've been running it like a, what would you say, like a senior software project, college project or something like that. It seemed like, because it just seemed like an absolute, it was a joke. It was just, and now on top of it, you got, what is it, Vitalik out there writing a sci-fi novel now? He's going out there writing a sci. Come on, man. Optics just look bad. Somebody needs to explain to these people, optics is everything. Impression is reality. Doesn't matter what your intentions are.
That's true. I'm looking at this one and it's like, okay, looking at the 5 different teams they're trying to go for, yeah, it makes sense. I wouldn't be surprised if they already had all these things that they were already doing and they're just trying to formalize it at this point. Because obviously the protocol layer, this is like basic security and operations. After that, you got the access layer. This is building tools for people to actually get on chain and build more stuff. The user layer is just doing research on what's actually going on. And then community layer, this one seems very just PR focused. And then lastly, the institutional layer. I think that this is probably the newest or more large engagement that they're having, which is that they're actually trying to engage larger players about being on the chain, which seems kind of counterintuitive to me because it's like you've been number 2 pretty much for the last like 8-12 years at this point. Based on that alone, like you should already have the name recognition. You really shouldn't be having to like go court people about building on Ethereum, given all the statistics and metrics that we've looked at, which is that people are already building on Ethereum. People are already using Ethereum and looking at it. I think that Ethereum, the big takeaway for me from this announcement is that I think Ethereum's in a shaky position. And I think that a restructure and a layoff and reduction like this is signaling 2 possible things. One, they actually explain a little bit below here. They're saying that the restructuring of the policy began back in 2025. And what they're doing is that they run approximately 15% on treasury assets every year, and they're trying to cut that down to 5% by 2030. So at this point, they can actually operate in perpetuity based on that sort of budget alone. But at the same time, whenever it comes to layoffs and restructuring, what that does signal to me is that something has not been working and you're trying to figure it out. I don't want to say that this is like a Hail Mary throw or something, but I think that Ethereum is maybe getting a little bit spooked, or they're maybe waking up to the realization that they're not as strong as they once were, and that they are going to have to change some things in order to really retain their position and ensure that they are the number 2. Because if we look over here, just based on I'm on CoinMarketCap. Looking at size, they're about 187 billion. BNB is 75, XRP is 60, Solana is 40, Tron, that's our Chinese one, that's about 30 billion. So they're still head and shoulders above the competition. But the competition's been closing in, especially over the last cycle, and they are not nearly as far ahead as they once were. I'm not saying they're going to get dethroned like today, tomorrow, or even within the next year, but I'm saying that given all the stuff that we see, which is like people are trying to replicate the Michael Saylor strategy, and they're like, oh, we'll go to the number 2 chain. That's Ethereum. You try to do it there. That only works as long as they truly believe in it. If you start seeing those people, maybe start looking other ways or other places as maybe greener pastures or more open markets that they can really try to get a corner on. I think that that kind of stuff could really throw Ethereum through a loop. So
Well,
I'm
they
looking at
are.
this.
But they are. You nailed it. And they are. Meaning they need to wake up, and you're spot on with what you're saying is what I'm agreeing with you here. That is, Ethereum was the one out there, but we just saw the real world assets, right? You got Binance catching up. Solana certainly is starting to gain some traction. Stellar, was it Stellar? I'm trying. Which one got the nod to do investigations on the entire derivatives market from that
Oh gosh.
organization that's in charge of everything? Like they nodded them to look at possible real world assets. So what I'm saying here is there's building and expansions happening on other chains that are starting to catch up, and Ethereum hasn't been doing anything. And that's been the knock on Ethereum, is that they haven't been aggressive. They haven't been out there pushing in, and you won't hear a lot about them. They're just kind of there. So and that's what's been pissing everybody off. And Vitalik going out there writing a freaking sci-fi novel doesn't make people feel happy about it either. Now, how much is he involved in it and whatnot? He's always said he wanted to get out of it. But if these are the people that are going to do it, that's fine. It just, they need to start not just this, but my question is, did they lay out a roadmap? That's what people want to see, is a roadmap. What are we looking at? 6 months, a year, 5 years out? Like what should we be envisioning is your roadmap? That's what I want to see.
Yeah. As much as people want to see a roadmap, I also think they just want to see good stewardship and an actual thing that's showing growth and profitability. And I don't think Ethereum has been showing that. But also, I think one key thing to keep in mind with all this is that the Ethereum Foundation really kind of is the first of its kind. Granted, it's the number 2 cryptocurrency, but it's only second to Bitcoin. Bitcoin doesn't have a foundation. Bitcoin doesn't have a team that's constantly trying to improve it and apparently like go court people to build on it and then invest in it. Bitcoin doesn't have any advocates for itself outside of just existing and being the thing that people know it is. The
Store
Ethereum
value.
Foundation,
That's it.
Ethereum Foundation it's kind of the first of its kind. And yeah, we don't really have a historical record of how these things should operate or what they look like when they're doing well. But we have knowledge of what businesses look like when they're doing well. And at the end of the day, this is a business effectively. So, sure, it's the first foundation for a cryptocurrency, which seems kind of crazy, which is like you have a whole company for a money as opposed to a company that makes a product. But the Ethereum is the product, or at least the experience, the tools, the cryptography, that is the product effectively. So, looking at this one, yeah, you had layoffs. You had a reduction in your operating budget by 40%. That's no small thing. And I think that that comes at a time where they've looked at this over the last 4 years. They did not grow as much as they wanted to. A lot of their gas fees were solved, but at the same time, it was solved in a way that was almost detrimental to them, which is that like the gas fees do pay for the platform itself. Granted, you don't want it to get to the point where you're paying like $100 per swap or something, but the L2s not the L2s operating on their own the way that they did, to the point that it reduced the traffic on the Ethereum network and the gas fees especially to like honestly almost like super low levels. We're talking like under $1 for gas fees in most cases for stuff. And I just think that they're not where they wanted to be. They're not where people expected them to be. Price definitely isn't where people have expected it to be. But at the same time, they're still number 2. And the question is, why are they number 2? I think it's because they've been a very strong network. They were the first ones to really do smart contracts on chain. That was an exceptional technology that they pioneered and put out there. But at this point, everyone else has smart contracts. A lot of other people have L2s. We're even getting like successful layer 0 networks now as well and stuff. So aside from just the size, the name brand recognition, and the existing allocation of funds that are locked up on chain, I don't really know what else Ethereum is doing that other stuff is not already doing. It's kind of like they are the social network that has the most users. They're not the best user experience, but they just have all the people, and because they have so many people, that's just retaining their positions so well.
Well, I look at it like this: ETH, it's a network. You're right, it's a network, or it's a technical foundation where vast majority of applications and protocols can be built upon, right? It's, are they going to become like, are they going to become the MySpace and somebody else is going to become the Facebook? As far as the network effect, that's where they got to start waking up to it. At the same time, are they going to, in technology, either you're evolving or you're dying. And I haven't really, now here's one thing: people tried the L2s, they didn't seem to go over really well. Now Ethereum is refocusing back to the Ethereum network, and they're going to try to focus on Ethereum. The one thing with scalability and the price and all that, they seem to have fixed quite a bit of that, but yet we really haven't seen the massive spike. We saw it in about a year ago. We saw some big spike, but the transaction fees still stayed pretty low. But so the fees have been fixed, but how are they going to hold up during a serious bull run like we saw, during the last altcoin season? That's going to be determined. But they have been scalability, they have been reliable, they have built on. So it's there. It's just, are they going to keep moving forward? Now I know Solana has been the nudge for the U.S. The U.S. wants Solana. I can tell you right now, all the backers want Solana because it's the home base is in the United States and they can control that. Ethereum is straight up DeFi. It's all over the place. So I don't know. I just don't know if Ethereum needs. I mean, I'm certainly betting on Ethereum, and because they're the big ones. But yeah, I mean, they need to wake up. They need to come the party and show us something, what they're going to do. Putting this out here, that's great. You're going to run it into sections like you, and I said, yep, you're probably right. They've already had these areas. They're just trying to maybe show more structure in place. They cut 20% staff. I know they did the other things that you said for the treasury. I need to see something out of them. I want to see more adoption on the Ethereum network. I want to see bigger partnerships. I want to see the derivatives market talk about putting it on Ethereum. I want to know the NASDAQ and the Dow, they're talking about tokenizing these. Cool. I want to hear them come out and say they're going to tokenize on Ethereum. So there's a big question mark right now. Who is going to get these big shares to tokenize? And I know they, was it Stellar or XRP? I forgot which one it was. They got tapped on the shoulder to look at it, but they're just starting to look at it. Ethereum can do it. So I don't know. They got a huge jump, but yeah, I like to see them wake up and start running this thing and start producing stuff. But then again, if you want to know why they're not developing, they are developing, but I don't know if it's because of the Clarity Act holding up, because they need some clarity on those areas, to run the pun, but try to get that in place so we can start seeing it grow in those areas. Or is the growth going to happen regardless? I know it's already happening, but at what velocity? So
Yeah, despite all this, like, do I have some questions for the Ethereum Foundation itself? Yeah, absolutely. As far as the underlying asset Ethereum goes and the network, I'm still very, very excited and bullish on what it's going to do in the future. I think it's still positioned well. If it just like doesn't fumble the ball again, it can recover and just go back to explosive growth. I still think that is definitely in the cards, especially given everything going on with all the stuff we talked about, which is like the real world assets, tokenization, expansion of the use of all kinds of different products when it comes to ownership, and Ethereum's primed and ready to handle it. It's people are going to have to get in there, and then money and other people are going to have to follow in suit to really get the markets going in that direction. But I think we're starting to see indicators that emerging markets are starting to exist on other stuff. I know it sounds like kind of stupid and pretty small, but the fact that Solana has tokenized SpaceX stock on it, and it did like over $300 million in volume in the first like 72 hours, that's not nothing. And that's really kind of pioneering the stock space as well, because we know that is going to be one of the big initiatives over the next pretty much like 5 years, effectively, is putting the stock market onto a blockchain. Ethereum has been the obvious answer for it, but we're starting to see people dip their toes into other areas. I think Solana is kind of suffering from its own success in a little bit of ways, which is that they were very successful in the last cycle, but they were very successful as the meme trading platform. They weren't successful as a place for DeFi. They were successful for activity, hype, and ultimately pump and dumps effectively, but not really a whole lot of substance. So the fact that, like, yeah, we have tokenized stock on Solana, that's something of substance. How much more of that can we get on there is going to be the question of, are they going to start to take over the spot over Ethereum? But as it stands right now, yes, over 50 billion. Last we checked, it was $50 billion is locked up in real world assets on Ethereum. The next closest thing is like $5 or $8 billion. But pretty much outside of that, it's like,
Yeah, I just
I don't
sent
know.
you the link. I just sent you the Ethereum is sitting at almost 15 billion and real world assets locked on there. And then Binance is at 3.6, Stellar's at 2.2, Solana's at 1.8. And then it's a pretty good drop from there. So
That's true. I
that's where we
guess
are.
as far as the future things I want to see Ethereum do, let's look back at our article here. Okay, protocol layer. I want to see those guys really work on the zero knowledge EVM. I think that Zcash has had a massive explosion. They're still number 12 on the overall market. Last, gosh, like a couple of years ago, I remember like Zcash was always this like kind of mysterious thing. They're like, oh, it's a privacy token. They historically don't do well. It's why they're like pretty close to that 100 mark or below it. This guy's number 12 now. It's wild to think about. So I want to see the zero knowledge stuff come through. As far as the access layer, I think this has the potential to be one of the real money makers, building tools for users and AI agents to transact and delegate on-chain without intermediary reliance. If you are going to push DeFi and you're going to push further integration and automation, especially with AI stuff, this is where it's going to happen. And I think that if you can get something workable and something that is reliable also, that could be a massive draw to have people go there. Because AI, I think, is starting to peter out when it comes to just the standard conventional business application. If you can actually give AI the ability to really work on chain almost on its own, with obviously with direction of the user who puts it on that direction, but without having to be like managed, micromanaged, and pushing all the wallet buttons and doing all that kind of stuff, I think that could be a shift for the AI narrative of going from like conventional business and all the nonsense about data centers and chips and be like, oh yeah, use case. We can actually like get this stuff integrated into crypto, and that will be the new lifeblood for AI. User layer, this is just research. Community layer, this is even less important to me. The last one, I think the institutional layer, this one is also potential, especially because we saw ETFs come into the market this last cycle. And if we could get other sort of institutions to start putting stuff, that could be the narrative for this next upcoming cycle. So Ethereum has the potential to actually craft one of the main narratives for the entire next 4-year cycle. And that's a pretty big opportunity if you can capitalize on it. Yeah. What do you think?
I mean, yeah, I think it's a no-brainer. Absolutely. And that's why it's a cat race. And that's why so many people are trying to get the edge on it. I still think the regulation is still holding things up. And I still think because I forgot which company was that's in charge of the derivatives market that tapped, sorry guys, Stellar or XRP, for which one it was, but they tapped them on the shoulder asking them, can you look into researching tokenizing the entire derivatives market into real world assets? So I think right now everyone's trying to still this. It's up for grabs. Who wants it? And I think they're starting to do research to figure out which one they feel more confident with, and that's where we are.
True. Gosh, I'm trying to find this story that you mentioned, but I cannot find it right now. It's gonna drive me crazy. Alrighty, for you,
Jump to the new one. Jump to the new one. The other story. Sorry, I apologize. Jump to the new one. And I'm gonna go ahead and look at the. I'll find it for us.
Alrighty. So heading over to what we have in the headline of the show here tonight. The U.S. Senate has passed the housing bill, which they snuck a CBDC ban into as well. And by the way, we have a excellent little shout out to our good friend Moonpill Rational Optics. He says he's all in on CBDCs. Actually, fill his bags. If you don't like them, doesn't know if you can be friends. It's government backed. It's going to weed out what's valuable. You know, currently buying Dogecoin. Don't you? Thank you, Moonpill, for absolutely trolling us as the show is getting ready to go live. But yes, the CBDC is one of the big announcements. However, it's actually kind of a non-story once you get into the greater stuff going on. Looking at it here, we have a 85-5 vote from the Senate to pass the housing affordability bill, which includes a ban on the Federal Reserve making a central bank digital currency until the year 2030. So specifically, what we're looking at is, where did it go? The clause in the bill became wrapped into the housing package as a political sweetener to secure support from House Republicans and the administration for faster passage. The ban makes a carve out for private stablecoins or any, quote, dollar denominated currency that is open, permissionless, and private. And after that, the CBDC ban lifts in 2030. The Fed can't act on a CBDC without explicit congressional authorization. So here you go. From the text itself, prohibition, except as provided in subsection C, the Board of Governors of the Federal Reserve System or a Federal Reserve Bank may not issue or create a central bank digital currency or any digital asset that is substantively similar to a central bank digital currency directly or indirectly through a financial institution or other intermediary. As far as government language that I've seen, this is some of the clearest and most broad reaching that I've seen in a hot minute. So if you're wondering if there's like any way to really weasel around this one, honestly, this is pretty rock solid as my personal opinion here. But the overall kind of
I got to ask something here though. Well, go ahead and finish. Go ahead and finish. No, you finish.
Yeah.
Finish your thought. Sorry.
So the bill was passed through the Senate. It is currently sitting at the desk of the presidency. It is going to remain at the desk of the presidency until they pass the SAVE Act. And that is the official stance from the Trump administration. The SAVE Act is currently the political number one issue as it stands right now. And even though this is up there, it's going to be held hostage as kind of political football until the SAVE Act gets passed, which, my personal opinion, the SAVE Act has overwhelming support from the American populace. But for some reason, Congress doesn't want to pass it. And that is slightly concerning, especially considering that that act is supposed to secure elections and really make clear what elections are, what they're supposed to be, and how you can run them so that we can just like once and for all end the arguments about like who is cheating, how they're cheating, all the nefarious means. But unfortunately, our sweet crypto boy of a bill is it's going to linger and rot and fester until that other thing passes. So
and that's where the line in the sand is. That's not, they're not going to see eye to eye on that. And the problem is when you look at that, people like, and I love it. I've read articles from both sides, conservatives and more liberal sides, and it's hilarious. Some of the news articles say there's no evidence of showing that there's been very little to no fraud. And I'm sorry, if anybody would just look up how many states are allowed to allow, and I don't want to get this into political banter, but this is the facts. The facts are there are 19 states in the United States that allow people to vote that either need no identification or they need a driver's license to vote. Here's the problem. In a lot of states, you can get a driver's license and not be a U.S. citizen or not even a undocumented foreigner in this country. You can get a driver's license. So that right there, you have a massive loophole. Now you're like, well, how do you know? Well, there's a lot of campaigns that are out there that give money to people to vote for these, allegedly. So that's the problem. That is a true underlying problem. And I don't know how any sides could not see the same thing, that we're only people who should be able to vote in this country, United States, should be U.S. citizens. That's pretty clear. I don't know, but for whatever reason, I mean, there's a lot of reasons, but we know why. All right. So
the argument extends even beyond the illegitimate people voting as well, because we've seen early voting, mail-in voting, all that kind of stuff, which is just rife for the potential for fraud. And then also just the concept of voting day has gone away entirely. And I think the California primary election has actually resurfaced this issue greatly, because they have measures in there, which is that they can keep counting ballots like up to like 7 days after the election, as long as they verify a signature. And their definition of signature verification is some of the loosest terms you can ever see. It's pretty much as long as you make like an identifiable mark as a signature, it counts. And that includes stuff like smiley faces.
I love the ones where you have counties where more than 100% of the county voted, and they start digging it up, and there's people that are voting, that a lot of them that were dead, not alive. I mean, it's just like, how are people not going to jail for that? That is what's called fraud. Like, it's pretty shut and dry.
Yeah,
it's a problem. Both sides know it's happening. It's just like, this is, can we make it fair here? And it seems
even
like,
if even if the argument is that it's not happening, it's like, okay,
why
cool,
would you have
it's
that
not
loophole?
happening,
Right?
But the potential is there. The threat exists. The risk and probability of it is non-zero. So just eliminate it now.
Yeah, and don't get me wrong, there's fraud. I mean, there's tampering in all these elections around the world by a lot of different entities, so that goes on all the time as well. So that's another big problem, but it's gotten pretty disgusting. It's certainly not a fair let's just put it this way: the citizens of any country do not control the outcome of their elections. Let's just leave it at that. And there's a lot of evidence to support that, unfortunately. And that's for a lot of different countries, which is sad, but true. Now,
Fair.
go back to what you were saying. Yeah, so that's going to be held up because of this. CBDCs are not going to like. So go back to that little blurb you showed. What I want to know is, so go back to that blurb that you were showing that defined, it was like in white. I thought it was white. Yeah, here you go.
Yeah, the text.
Here's my problem. So here's my problem. CBDCs directly or indirectly through a financial institution or other intermediary. So they're saying CBDCs. So based on this definition, how do stablecoins not fall under that definition?
How do stablecoins not fall under this position? So stablecoins do fall under. Here's the thing, though, is that they very explicitly call out who cannot do this and what they cannot do. And that is the Board of Governors at the Federal Reserve or a Federal Reserve Bank cannot issue or create any currency or digital asset substantially similar to that central bank digital currency.
Correct. So here's where I'm going with this. And that's why I'm walking through this. The government can't do anything, essentially, is what they're saying. But private entities can do those things. And this is what we keep seeing, and this is the problem why a lot of people have a problem with it, is the United States government has been buying up other companies or buying big portions of these companies strategically, micro semiconductors and rare earth minerals and other assets, and including Circle, UST, and other stable coins. So the problem here is that all of these companies, there's many companies out there that basically act as an extension of the government, and they are protected because they are a private entity and you can't ask questions because it's a private entity. That's the problem. So you could write all this you want, but my problem with it is that they're going to state this and say the government can't do it, but other entities can. I mean, we all know that Google, Facebook, and all these other companies are just an extension of the government. Palantir and all these other data centers and all, they're all extensions of the government, but they're private entities. That's the problem. This thing has gotten so big that they can pretty much do what they want. And here's the other kicker that's a problem. For our sake, what's the difference between a CBDC and, say, USDC? What would be the difference? One would be issued by the government, one's issued by Circle or a private entity. Okay, well, the big threat on CBDCs everyone's concerned about is that you could be put on a list, or something could be blocked or blacklisted or turned off, or, and what have we seen recently with UST and USDC and other stable coins? This is exactly what you've been seeing. I mean, is it Delquan? Is that who's in charge of Tron?
Delquan, that sounds familiar. I'm not super up to date with Tron.
CEO of Tron, the one who just had a ridiculous amounts of money frozen. That was stable coins.
Doquan,
I think is so that's just a little example. That's just a small example of what's the difference between a stable coin and a CBDC? All I can say is one's from a government, one's from a private entity. The private entity is actually an extension of the government. So that's the threat, and that's the concern. The CBDC, the big boogeyman term that everybody's saying, no, we're not going to do this. Well, to me, this feels like political theater. Is what it feels like.
I think I'm going to slightly disagree with you on that. Okay, I think your analysis is entirely correct, though, which is that one of the main tenets of DeFi is the ability to transact anonymously, trustlessly, anywhere in the world. What any sort of centralized digital currency does is it grants power and authority and control to the person that issues it, and can ultimately try to shut it down if it's built into the protocols, that kind of thing. The reason I'm disagreeing with you is that I think that the level of the federal government is a very special and uniquely reserved level of power. And the reason I say that is because they have ultimate jailing authority, and they also have the power to tax. Because you have the power to tax, you have the ability to determine what currency you can accept for said taxes. As a result of that, if you require that people either use US dollars or a centralized digital currency, it creates a mandate that people use this thing. And it's solely reserved for this very special level of power, which is the federal government. Because you are banning the federal government from creating this centralized digital currency, it does stave off kind of one of those boogeymen that we're watching out for. Does it mean it entirely eliminates the threat? No. And that's where your analysis comes back into play and is entirely correct, which is that anyone out there could create their own token and their own currency, get it in circulation, and then still have ultimate control over it. At that point, it's up to the user base to choose what is best for them, and they have the discretion to choose it. Back to the level of the federal government, they have the ability to remove that discretion from people. It's one of the very few entities that can do that. And because of that, it means that banning it for them is actually one of the best things that we can do in the situation. But the ultimate price of this is that you can't just ban it at the federal level and call it a day. You still have to do exactly what you said, which is you got to remain eternally vigilant. You got to understand what's going on with these currencies, who has control, all that kind of a stuff. And when it comes to digital currency, the world gets more complex. It's very hard to put a control on a single US dollar bill because that is a physical thing that I have. And aside from having an agent watching what I do with all these little pieces of paper, which would be near impossible to enforce, once you go digital, it's a lot easier because it's just digital controls, which are fast, broad reaching, and very, very pervasive. So, yeah, we still have to watch
Very
out
well
for
said.
making the list
Very
and
well
stuff.
said.
Go for it.
Very well said on that, and I agree with what you said that they've taken it away from the federal government, which I don't have a problem with that. You're right. That's a really well way to put it. You've taken it away from that entity, but it's still going to be a threat through other layers is the problem,
Correct.
and and it's borderless too. So your laws in a country, they mean absolutely nothing because just like I saw how, what was it, the Chicago mayor was going to, Illinois mayor, sorry, was coming out saying that they're going to start taxing transactions between own personal wallets, which was absolutely ridiculous. Like between your own self, your own entity, they're going to start taxing. And
For
it's
the
like,
folks at home, just imagine that like the federal government is trying to tax you when you take money out of your wallet and put it into your rainy day shoebox under your bed, and then vice versa.
yeah, the best one I saw in the comment was like, so great. They're going to, that's like taxing me because I'm taking money out of my right pocket and sticking it in my left pocket.
Correct.
And it's like, wait, what? And that's what they're doing. At least that's what they're proposing in Illinois, which that there's a whole bunch of stuff that, hey man, they need them taxes. They got to get them some way. That's how I chalk it up for. So just to put it on, like, I gave you the latest link there. The last one I sent you in our private chat, the latest one, it was Tron's Justin's son. He's suing Trump-linked World Liberty Finance over freezing assets. That happened on April 22nd. And yeah, it was a good substantial, invested 45 million, blah, blah, blah. I forgot how much money that they actually froze. It was quite a bit.
It was in the millions. Like I want to, if I remember
Yeah, on
correctly, it
November,
was
well, there was two here separately. In November 2025, in Dubai, court issued a worldwide freeze over $456 million in assets tied to Sun's bailout of the True USD. So that was frozen. So the Dubai court froze that money, and then World Liberty came over here and then decided to freeze his stuff in April of 2026. So that is substantial. And I forgot how much it was. It was not chump change. It was a lot of money. I'm looking through here really quickly if I can find out how much it was. I think it was 200 million. Complaint
200
allegedly the
million
World
sounds
Liberty
about right.
froze tokens served a dual purpose, pressuring him to mint 200 million of the. Don't have the quiet thing, but what we're showing here is this is a great article that just shows you how these stable coins can absolutely they can just freeze who they want. There's kill switches. So it's not true DeFi. It's not. These Circle is being run by, I mean, and there's big institutions that do support these ones. I mean, you have I think BlackRock has a stake in Circle, right? They have about a 33% or 30% of Circle. Others own Circle, and they're more like an extension of the TradFi essentially. So if there's a threat out there, or whatever they deem a threat, they can just hit a kill switch. UST is done a ton. UST is taken out a lot of people's funds as far as freezing them. So be very careful with stablecoin. So I guess the short party is this: one of the battles was won with the Federal Reserve, them writing this and making it legal to where they can't do it. But it was only until 2030 though, which is everybody always worries about the year 2030. Of course, there's a lot of reasons that people are swirling about that one, but interesting that why is it only banned until 2030? That's an interesting, like, why? Did they state why 2030?
Let's see.
Like, why not just make it indefinite? Like, why couldn't, like, why give a loophole like that?
That is an excellent question because realistically, they do have the power to ban it indefinitely. I'm probably assuming that because they put it in a housing affordability bill, there's probably a lot of stuff that sunsets around that time, and this probably just got tied to it. If I had to guess, I'm trying to figure it out right now.
I don't know, just the whole thing. This is what freaks people out because, you know, it's like you can't just do what you want to do anymore. Everybody seems to be like always wants to overcomplicate things, it seems.
Yeah, it looks like it was actually part of just a legislative compromise, and it's a standard sunset provision that was tied to a lot of the other stuff in the bill. The timing for it is actually for 2030 is actually the end of the next president's term, effectively, or at least
Yeah,
getting close to it.
right. And that's the other concern that we
We're
have
about
here.
halfway, actually.
Yeah, but and here's the concern we have because this administration has very been pro crypto. Who's to say you don't get another administration the next that's very anti crypto? But to put people's minds at ease a little bit, a lot of the parties, and it's interesting, most of the Republican parties seem to be more in favor of crypto. It seems to be more in the Democratic House. But a lot of these new young Democrats that are coming up seem to be more pro crypto. So I think it's starting to become more common, more acceptable, because I think they're all seeing the same things in their mind. This gives you, this is just more, I don't want to say levers or more controls in place, but at the same time, it makes streamlining of things much more simplified. It allows things to happen and move quicker. So I don't know. I think they're buying into it more, but they just 2030 has an out from this. But like I said, I wouldn't even be worrying about CBDC. I think it's got such a bad boogeyman vibe to it that there's no reason for them to bring this up and even try to do it, because on all intents and purposes, if they really, really want to have control, they can do it through through other institutions, like I stated, that can easily be done that way. And they've already proven it can be done. USDT and USDC, they've clearly done it.
Yeah, I still think that the powers that be, once you have the ability to have this kind of power, it's always going to tempt you. It's always going to be that green goblin mask that's saying like, "Do it," you know, that kind of thing. But I think at the end of the day, I still want to call a win a win, even though technically it's not over the finish line yet. But it's like literally this is just being held up by one other thing, which is the more pressing issue of the day. So technically, it's not banned yet, but it's done. It passed 85-5. By the way, that is enough. That is a veto proof majority, effectively. Because if it does get formally vetoed by the president, guess what? It can go right back to Congress, and then they just have to get a 2/3 vote, which they have, and then it immediately overrides the signature of the president.
Right.
So overall, I'm still looking at this as an absolute win, a great thing. And to extrapolate this a little bit further, granted, the CBDC ban is a lot less controversial when it comes to crypto stuff than actually passing crypto regulation. And it was also attached to the housing affordability bill, which, as folks know, housing affordability is one of the large issues of the day. But in my personal opinion, I highly doubt that anything in this bill is going to make housing more affordable, and it's probably going to increase prices because that's just how the government works. But trying to extrapolate this a little bit further, we got the Clarity Act coming up for a Senate vote sometime in the near future. Theoretically, if this passed with an 85-5 vote for, there's an argument to be made that crypto appears to be still very favorable when it comes to the Senate view. If that's the case, then I think the passage of this bill actually increases the likelihood that the Clarity Act will pass.
Or at least get that 60 vote that they need to bypass filibustering. Correct.
Correct. Exactly.
Yeah. Now, I will say, here's the numbers here. USDC has accumulatively frozen around $110 million across 372 addresses. But that is chump change compared to USDT, sorry, Tether. They have accumulatively frozen anywhere between 4.2 and 4.4 billion dollars across thousands of addresses. So, yeah. How you like that? So these are legitimate numbers. These are actual people who had DeFi that had addresses that got these funds frozen, and you can't unfreeze them. I mean, I'm not gonna say you can't unfreeze them. What I'm going with is once they have been basically like if you have a wallet, let's say you have a DeFi wallet. And you're not on a central exchange, even if you're on a central exchange, if you have a wallet, it's a wallet. But they could essentially go in there and they have code in there where they can kill the tokens, those tokens that are in that wallet, and basically freeze them or set them to zero where they become worthless. They can easily do that. It's basically a kill switch. So it's something to be very, very aware of. Anybody who's in crypto needs to understand that. And the scary part about it, people are like, oh yeah, well that's going to shut down. And of course they're going to hear that's going to shut down, black market and horrible criminals and all that. But then you start getting into the lines of who's a criminal. And we can go down this whole rabbit hole for a whole long time. And I don't want to go down that rabbit hole. But what I'm getting at is who's making that decision, and that's the scary part. Now, at least the United States is not doing CBDCs, but I know the European Central Bank and their system, I think Europe is actively preparing to launch a CBDC called the digital euro. So they're already moving forward in that area. So good luck, Europe.
Yeah, unfortunately, at the bottom of the article, we also get even more of that black pill. Meanwhile, other nations are charging ahead with their plans for CBDC. Reuters reported on June 16th that China signed up 26 financial institutions for its Digital Yuan cross-border payment platform. 3 countries have officially launched a CBDC, while 41 are in the pilot phase and 33 are in development, and additional 40 are still researching. At a glance, that is 127 countries that are looking at CBDCs, which is most of the countries on the planet, by the way.
Yeah. And then the thing that's scary about that is, and I know when the big thing that started getting traction here was a couple of years ago when they started launching it. I'm looking up now which African country it was. I don't think it was Nigeria. I don't know if it was Nigeria, Ghana, South Africa. I know these are all coming up with CBDCs now, all of them. Yeah, there was Nigeria. They launched in October 2021. They launched a central bank digital currency there. And I remember reading about this, and there was big pushback by that. Not just that, but digital ID cards too. And they stated that you could not only, and they were only limiting people to take out equivalent like $100 out of the ATMs or something like that was allowed to be taken out. So they were capping off what people could pull out of their, spending. They were pushing this hard on everybody to use it, and the good for them. They pushed back, and it was major backlash. So they unwound it, and they pulled back on that because they were basically at the head of the spear when it came to implementing it. So people were pretty much pissed off, and they uprose, and they unwound the process. Not to say they got rid of it, just saying that they pulled back the launch dates because there was so much backlash from the communities.
Yeah. By the way, this is the Atlantic Council. They have a CBDC tracker. So if you are interested in learning more about this is actually a phenomenal website to look at it. They have all the ones with launched, pilot programs, development, research, inactive, canceled, and others. So yeah, I believe you are Nigeria. Yes, you are launched, and it is a retail case.
Yep, one of the first ones.
The other ones are going to be the Bahamas, Jamaica. Those are the 3 that are officially launched. And then as far as pilot programs, that is a lot of pilot programs, and this map looks like a lot of the developed world because we're looking at Brazil, Australia, a lot of the
it's all the bricks. It's all the bricks.
Yeah. Well, honestly, yeah, that is what it is. But this one's slightly surprising. Canada, what are you doing over there?
Well, their extension of France, and France is launching it. That's pretty much what that's about. But but Nigeria was the one that was kind of head in the spear, and that's where I know the IMF and others were doing a lot of the pilot programs in Nigeria to see how this was going to be rolled out. But the fact that United States is going to try to ban it is a huge step forward, and now the whole world is looking at United States. So I kind of pull back what I said. You've kind of sold me on the idea. I think just from an optic standpoint, that the fact that they did that speaks volume, because hopefully the rest of the world can start seeing like, hey, why is the United States rejecting this? Why did they have problems with it? And these people can start understanding and reading that the United States pushed back on the CBDCs. Not to say, like you said, threats of stable coins and other things, but because the United States, that is the world currency. So why are they pushing back on CBDCs while everybody else is pushing for CBDCs? I'm just saying it like I said, it brings people's attentions, and I do like that. So that is actually a really good win. That from that standpoint alone, just on that map alone, is scary.
Yeah, it really is. But I think the United States may have a little bit of a unique history when it comes to currency. because we are, in the grand scheme of the world, we're still a relatively young country. But within that time span, we have had a lot of experiments with currencies, and most of them did not go well. So we've been trying to figure it out for basically 250 years at this point, and I think we have a decent solution. However, I think we also kind of shot ourselves in the foot back in the early 1900s when we created the Federal Reserve, but that's neither here nor there at this point. At the end of the day, I'm still just happy to see that the CBDC bill got passed because I think it gives hope to the Clarity Act. And I think in and of itself, it is a good thing to keep out of the water because I do think it's a 0 to 1 moment. And once that it's Pandora's box, once it's out there, you can't put it back in the box. Yeah. Alrighty, tell you what, that is pretty much what we got here for you guys this evening. But shout out to everybody that has been keeping up to date with what's going on inside of our Telegram. I did a short little stream earlier this week talking about the potential price action, and well, my worst fears were realized. So that's kind of a classic thing for the people in the Telegram that know. They understand that I make a video and then something then happens. I'm not saying I caused it, but I'm just saying the trend is apparent. Anyways, if you guys want to get inside of the Telegram where you can find all of our exclusive live streams, the ongoing news, ongoing research, and of course our ongoing chat. I think right now we're literally helping a guy figure out how to deal with some errors on his wallet. So we're in there to help people out and help the community, and you guys help each other out too, which is fantastic, by the way. So if you would like to get involved in this fantastic private Telegram community, you can head over to walktheblockndf.com, head over to the membership tab, and from there you can find the sign up. Around these parts, we like to say the waters get rough, so don't sail through them alone. Come join us as we navigate digital finance together, private mentorship, exclusive live streams, Q&A. Go from beginner to intermediate to expert with us. We all work together, we can all win together. Alrighty, that is what we got for the show this evening. Good sir, any final thoughts before you get out of here?
Just to recap on what we kind of reiterated throughout the show, try having more of a longer term horizon, have more patience in the crypto. You're going to need it because this is going to be a grind. This isn't going to be a sprint. It's going to be more like a marathon.
Yeah,
So
if you get caught
pace
up
yourself.
in the day-to-day price action, you're going to
Yeah.
get burnt out.
Yep. Pace yourself and have a strategy to when prices are coming at certain levels that you can be able to have cash to take action on those things. So that's what you want to try to do. Other things you're going to want to be able to do is, like I said, step away, start having shorter term horizon, like midterm horizons. So like 3 months out, what would you like to be at? 6 months, year, 2, 4, 5 years out, have a game plan there. Start building up that's the other thing we're trying to start talking about internally in our chat groups. What we're trying to do is start building out a shopping list of which coins out there look good, which networks seem attractive, which narratives seem to be working really well. Where do you want to? So we're going to be looking at trying to pick those out. Because right now it's about that time to start finding the shopping list. Once you have the shopping list, when those price actions start coming at those levels, then that's when you just simply take action when those clearance sale comes in. As of right now, I'm pretty much just looking at Ethereum, and that's pretty much the one I've been looking at, just dollar cost averaging in. Not to say I won't be looking at others, but longer term horizon, build your shopping list. If you don't have it, if you're not sure about it, reach out to get in the Telegram. We'll be more than happy to start working on that and laying it out. That's what we're going to be diving into next. We've covered some already in certain sectors that will be very attractive and will do very well, mainly around rural assets and things of that nature, because we know there's going to be building that infrastructure. And then the other thing is just stay here, stay alert. If you don't know all the stuff's going on, we're always scouring the news and staying up to date what's going on and what's happening. Really just trying to make sure that the big things, if you're not aware of stable coins, do some research. Look at some of the articles we talked about today. Go out there and look at the CBDCs and what's happening around the world. Understand what's really going on, because a lot of people aren't talking about this. Unless you're in crypto, nobody seems to know about this stuff. Or unless you're in those countries that have already been affected, like Nigeria, they certainly woke up quick and knew what was going on. So familiarize yourself with what's going on and understand what's happening, because we are moving into a world where technology is going to be a huge factor in our lives. So that's it. And the other thing is, get out there, have some fresh air, enjoy life. You know, it's summer, do some fun stuff. Don't get so tied up to this stuff. Don't be like living it day to day, and just have a good quality of life. Because guess what? If you ain't living, then what's the point?
Very true. Very true. Alrighty, that is all we got for you guys this evening. We will catch you guys next week at our usual time at 9 p.m. Eastern on Thursday nights, where we're going to be talking about what's going on with the world and the latest and greatest when it comes to the crypto news. Thank you guys so much for joining us here tonight. We will catch you in about a week. Until then, I hope everyone has a fantastic night, weekend, whatever you got going on. Till then, Bye bye.